Okay, so I hope everyone who intended to log in is in and ready for the webinar. Thanks for everyone for joining us today. Today we'll be talking about general bookkeeping strategies and how best to use our service and get the most out of your accounting. So let's get started. So today I'll be giving you a little bit of background about our firm, talk about some general bookkeeping guidelines, a little bit of advice, some bookkeeping tools, some detail about how best to calculate your HST. Then we'll move on to understanding our process to make sure that you can get the most out of our service. And we think the best way to do that is ensuring that you understand what we're doing. Then we'll talk about what's required to get your year-end prepared in terms of the documentation that we'll need from you. And then we'll get into some detail about some revenue and expenses, what's deductible, types of things that can be included there, and we'll have a Q&A afterwards. So we've been specializing in independent contractors for quite a long time now. It's been since 1984 when George Wall, the initial partner and founder of CA4IT, which is now CPA4IT, a bit of changes in the industry, accounting industry. So we've changed our moniker a bit. We are ISO registered. So for those of you who don't know what that means, it means that we are, we have a specific set of guidelines and procedures that an independent body ensures that we are adhering to, so that you know that we are doing what we say we are doing. We have specialized in information, so IT consultants, for many years now. A large majority of our clients are in the IT industry. So we have a vast knowledge of that industry, and we think we're the best at servicing IT consultants for accounting. So that's why we position ourselves as such. So in our opinion, a good accountant does several things for you. Firstly, they educate you as to what types of things you can and cannot do and how to keep your record. So making sure that you understand your bookkeeping, your options when it relates to tax planning, and how to plan for the future. Secondly, they ask questions. So an accountant can't service you unless it understands all of your concerns, understands your process and your goals. The only way to do that is to have those kinds of conversations. Third, understandable. To a lot of people, accounting is another language. So it's important that we're explaining your financial statements, your tax return, our service to you in a way that you can comprehend. Because if you're not understanding the words that we're explaining to you, then we really haven't done justice to the service. So it's really important. To me, that's really the most important part and job of an accountant. And lastly, understands your niche. So we think that we understand the IT industry better than anyone else. So we think it's really important that whatever industry you're in is something that your accountant has full knowledge of and understands well. So just some general guidelines about bookkeeping in general and preparing your accounting. You need to be proactive. So you need to be aware of your deadlines, which we'll have a look at shortly. You need to make sure your bookkeeping is up to date and ready to go so that you can meet those deadlines and are able to be compliant with what the CRA requires of you. Second, the more you take, the more you pay. So what we mean here is often people make withdrawals from the corporation and don't understand that those withdrawals have tax implications. So the more you draw from your corporation, the more you're going to pay. Do some tax planning. So this is something that we help you through, but it's important that you kind of have a general idea of what your intent is for the year. Now, we'll absolutely hold your hand through the process and make sure that your tax planning is as efficient and effective as possible. But it's really important that you understand how that works. So a lot of people hate bookkeeping, and don't blame them. It can be a tedious and time-consuming process. So I'm going to give you some tips and hints here today that can help you ease that process. Having a good system is really first and foremost in making sure this is as painless as possible. There are a lot of systems out there to choose from. Some are free and some can be very expensive. We think that the cloud bookkeeping option is one of the best out there right now. It's pretty cost effective and it does a fantastic job of providing you the reports that are useful to you. But a cloud bookkeeping service, excuse me, is only as good as the records you're keeping. So you need to have good records. Now, the cloud service helps you do that by automating certain aspects of your record keeping, which is great, which is part and parcel of why we think it's a fantastic tool right now. But you absolutely need to keep those receipts, keep those invoices on hand, should the CRA ever request them of you. So if you can manage these three aspects of bookkeeping, then you'll be in pretty good shape. So how do you pick a bookkeeping tool? So this is a little chart here that kind of helps you understand what each type of tool means for you. So a sophisticated general ledger program typically requires a lot of detail, so it's pretty time consuming, and to be able to input that detail requires some accounting knowledge. This probably isn't a tool that's going to make a lot of sense for the majority of our client base. Sorry, I'm just going top down. So the second option here is our CRED file, capturing revenue expenditure data. So this is a proprietary tool that our firm has available to all of our clients. It is free. It's not that sophisticated, so it doesn't really require much accounting knowledge. It does require a bit of knowledge in terms of how to use the spreadsheet, but it is pretty time consuming. It requires you to input dates and description and amount and classify it all manually. But it's very cost effective. So often our clients don't mind putting in that extra effort. Cloud accounting programs, the next one down the line. So these are, and sort of cloud bookkeeping services is sort of the same thing. It's using the same tool, it's just we're indicating here that there's a service for a bookkeeper to manage your cloud accounting program. So cloud accounting programs, there's a few of them out there, but we really are finding that our clients enjoy using QuickBooks Online, so QBO. Our clients are enjoying using it quite a bit. It's easy to use. The learning curve is not that difficult, and it really saves you a lot of time without really having to know a ton about accounting. And then, of course, if you have someone managing that product for you or that program for you, it's more hands-off, so it's, of course, less time and even less knowledge. So our clients tend to fall into that cloud area in terms of the bookkeeping tool they tend to select. Part of using any one of those tools is understanding how to calculate your sales tax. Now, there are two methods of calculating your sales tax. We'll start off with the long method, which is also referred to as the regular method. So I'll just go through explaining this slide a little bit, but total revenue, including your HST, $113,000. The HST you collected being $13,000, and that would be required to be remitted to the CRA. The HST in this scenario that you've paid on your expenses reduces that amount to be remitted, and then therefore you owe $11,900 to the CRA for earning that total revenue. Okay, so it's just kind of a simple example. So basically, the HST you collect less the HST that you pay is what you owe to the CRA at the end of the year. Now, there's another method of calculating HST, and it's referred to as the quick method. So for service-based industries who aren't purchasing goods to be resold, often this method yields a lower sales tax liability. So you aren't given credit for the HST that you pay on your expenses, but you are required to remit the HST you collect at a reduced rate. So if we compare it to the previous scenario, if your total revenue including the HST is $113,000, you would pay 7.8% of the gross revenue collected, so the $113,000, on the first $30,000, and 8.8% on the remaining balance. And as you can see in this scenario, the tax liability is $9,644. So when compared to the previous scenario, which was the regular or long method, there's quite a difference there, $11,900. There's a great benefit to making that election with the CRA. So I'm just going to pause here for a second and make sure that there are a few questions here. But my colleague Rachel is also on the call, and she'll be helping out with answering the chats. But we will have a Q&A afterwards. So I just wanted to make sure I made that clear. So let's go through some of the important dates to remember, because these relate to your deadlines and payments requirements. So it's typically our client's biggest concern, of course, is remaining compliant with the CRA. So January 10th or 15th, source deductions remittance due. Source deductions refers to your payroll tax. So the tax owing on the income you'll be reporting personally. The way we structure our tax planning for the large majority of our clients is reporting a single bonus at the end of each year. That bonus would be reported in the December reporting period. And then therefore, your tax related to that bonus would be due to be paid January 10th or January 15th, depending on the amount that you'll be reporting. And that's something we'll advise you on to clarify based on each individual scenario. February 28th is when the slips related to the income you reported in December are required to be filed. So if you're using our T4 or T5 service, you'd receive your slips in the first week of March, and we would file those slips for you before February 28th. If you're not using our bookkeeping service, that's a really important date for you to know, because you have to ensure that those slips are filed before then. There's a penalty associated with late filing any slips after February 28th. It's a $100 flat late filing fee, but it's easily avoidable if you know your important dates. Now, the third one here is something probably most people are already aware of, and that's the personal income tax deadline. April 30th, every year, you have to file your personal income tax and pay any balances owing and outstanding at that date. As it relates to your corporation's filings, there's three more important dates to remember here. And this works a little bit differently because it relates to your corporation's year end. So your corporation is required to file and pay your HST return. So file the actual return and pay the balance owing on the return 3 months after your fiscal year end. So if you have a July 31st, 2018 year end, you have to pay and file your HST return before October 31st, 2018. Similarly, you have to pay any corporate income tax owing 3 months after your fiscal year end as well. Now, as you can see, the last one there, the 6th month after year end, relates to when your corporate income tax return is due to be filed. It might seem a little bit counterintuitive there, because your payment on your corporate income tax return is actually due before the filing. And yes, that's correct. It's not a mistake on the slide. The CRA requires you to pay any balance owing 3 months before, but gives you an extra 3 months to actually make the filing. But really what that means is the return needs to be prepared and ready to go at that 3-month deadline for us to be able to accurately know how much corporate income tax you owe. So it's a little nuance you need to be aware of. So with regards to our service, we have several service packages available. But what we call our basic package is our time and material package. And how that works is we log all the interactions we have with you and any interactions with working on your corporation's returns. And each individual who logs time has a billable rate, and we accumulate that information, and that would be your year-end invoice. What can cause those costs to inflate are what's listed here on this slide. So if you're providing us incomplete information, so if we have to chase you down for this or that, then there's inevitably back and forth, and that all eats up our time. Inaccurate information, so if you are giving us information that's incorrect, of course, or unclear, that same result will occur, and we'll have back and forth, and it'll take more time for us to get to the bottom of what really needs to be reported. So to ensure that you don't end up in that pitfall, it's important that you understand our process. So here's a overall breakdown of our workflow internally, so that you have sort of a transparent view of what we're doing. So firstly, we receive your information and we have a look at it and make sure that we have everything we need. Once we have all the details that we require, we do the preliminary data entry with the information we have. Our staff reviews it for accuracy. Then we have, our staff reviewing it for accuracy would be the review meeting prep. So a senior staff member will take a look at the file and make sure everything's in order. We'll have what's called our year-end review meeting. We'll sit down with you either virtually or in person or however is convenient, and we'll go through that information with you and share with you what we prepared and all of the details of your financial statements. And we'll do a tax planning discussion and make sure everything's being reported as tax effective as possible. We're maximizing your expenses, ensuring that what we're explaining to you is understandable. After that meeting, there is a quality control check to make sure that there's no loose ends. And we finalize the detail, prepare our year-end package, which contains all of the documents that you'll receive related to your year-end, and we release that to you. So that's our overall process from start to finish. And generally that takes 4 to 6 weeks. So it's important to note there sorry, let me just jump back to that previous slide, that our overall process takes 4 to 6 weeks, which means if you have 3 months from after your year end to file, you really need to have your information assembled and into us during that second month at the latest, so that you're not up against that payment and filing deadline, and we have sufficient time to go through our process as a whole and make sure everything's prepared accurately. So in order to keep things in order, clean, and ready to go when the time comes, it's really important that you are consistent with how you're paying for your expenses. We find that using one credit card for business-related costs really helps mitigate any mixing of personal expenditures within that business-related expenditures, which of course takes time to separate out and make sure we do the necessary analysis on. Using cloud accounting programs really leverages automation in a way that ensures accuracy. Keeping up to date with your bookkeeping, so that if you have a July year end, halfway through July, you're not, oh geez, now I have to do a year's worth of bookkeeping. in 2 weeks, you really don't want to find yourself in that scenario because it's stressful. And most people don't like bookkeeping as it is, so it's better to keep up to date with it throughout the year. And completing your home office and automobile worksheets. So when working with our firm, we manage the expenditures related to your home office and automobile by using an independent spreadsheet. So you want to make sure that you're filling that out each year and submitting it to us. Beyond, of course, the bookkeeping, the types of things that we need from you to be able to prepare your year-end for new clients. So this doesn't apply if you're newly incorporated. This is for existing corporations. We would need prior year's financial statements, trial balance, tax returns, articles of incorporation, etc. So, and this is something we would go through with you when you're onboarded with us. And we need this information to make sure that any carry forward balances are being accurately represented in the year that we're going to prepare for you. The other types of documents that we would need from any and all clients, notices of assessments for HST and corporate tax. Now, typically, we have all of our clients sign an authorization form so that we can access this information online through the CRA My Business account. And if you're not aware of the CRA My Business account, it's a really fantastic tool, and I highly recommend, if you're incorporated already, which most of you are, that you sign up to get access to that. It gives you great information relating to your corporation's accounts with the CRA. Everything you need to know, really. Accounts with outstanding balances, whether your payment was applied correctly, any mail that has been sent to you is uploaded digitally to the site, so you have access to that if you lose or misplace something. Really anything you need to know about your corporation's account with the CRA. So if you haven't done that yet, I suggest after this meeting, you get that process started right away. It's a little bit cumbersome because they have to mail you a password, physically mail you a password so that you can log in, but it's not a difficult process, just a little bit time, elapsed time, because it takes about a week or two for them to mail you that password. But it's certainly worth getting that over that hurdle to have access to that. The next thing that we absolutely will need from you are all of the bank statements for your corporation through the fiscal year, plus the subsequent month to your year end. So again, in the scenario, if you have a July year end, we would need June of 2017 through to June of 2018. So that would be 13 months. And you can give that to us physically, drop it off at our offices, upload PDFs to the client portal, or just email us the PDFs directly. And really, statements, so the next item there listed is investment statements. Any account registered in the corporation's name, we would need the monthly statements for that account. So we're indicating investments here. We would also need credit card statements, anything registered in the corporation's name. But specifically with regards to investment accounts portfolios, we would also need any T3 or T5 slips that were issued to the corporation. We would, of course, need your bookkeeping, however you've tracked that. whether it's with our CRED, QuickBooks Online, any other general ledger tool that you have. So we would need that fiscal year general ledger. And as I mentioned earlier, our home office and automobile worksheets. Now, I kind of just alluded to it earlier now, but you can get us that information one of three ways, of course: dropping it off physically at our offices, emailing it directly to us, or uploading it to the client zone. Now, if you do upload it to the client zone, you still need to make sure that you let someone at our offices know, most likely your account manager. Let them know that you uploaded some information for the year end and that you'd like us to get started with the year end process. Sorry, just hang on. Excuse me one moment. So, I'm back. Sorry about that. What is deductible? Very few things are specifically denied by the Income Tax Act. There are a handful of things, of course, but it's not an exorbitant list, which means most other expenditures are open to some interpretation. If you incurred a cost with the intent that it will help you earn revenue for your corporation in the future, doesn't have to be immediately, but at some point, then that expense can be construed as an eligible deduction in your corporation. And that's really the only requirement that the CRA has for you to make a deduction. This is very big, of course, and it leaves lots of gray area to interpret your costs and your expenditures. So we always encourage you to, at the very least, include those items where you're feeling as though it's maybe in that gray area, so that we can, at the very least, have a discussion as to why we think that maybe it's applicable. And so what we don't want you to have is below average expenses, which of course means increased tax. Often this occurs because either you didn't know it was eligible, you don't have the receipts or the details about that expense, or you just feel as though it's too aggressive and you have CRA nightmares and you're scared that they're going to disallow that deduction. All of these reasons result in lower expenses and then therefore increased taxes. So the types of things that we use to ensure you don't find yourself in that situation are, of course, the cloud bookkeeping service, which really helps you capture all of your expenses because I don't think I've touched on it just yet, but a cloud bookkeeping service connects directly with your financial institution, so it connects directly with your corporate bank account and your corporate credit card, and it automates importing the detail in those accounts directly into your bookkeeping. So there are no missing transactions. You know you've captured all of your expenditures. That, of course, reduces the time required for bookkeeping and ensures that you don't have that first, as this last slide mentioned, poor record keeping. So it really helps you maintain a good set of books. Secondly, we use what's called our benchmarking tool. We keep record of all of our clients' expenses in each industry and maintain a benchmark of each category and what is reasonable for that group. And when we find that you're an outlier when compared to that benchmark, so if you're either too low or too high, we make sure that you are maintaining records and justifications for why you might be a little bit higher in a particular area. And we really dive in and make sure you're capturing everything if we think that you're maybe too low in a particular area. And what that does is help reduce your audit risk, which is why we offer what we call our audit representation protection, because we're so confident that we understand your expenses that we will represent you in interacting with the CRA if you should find yourself in an audit situation. So the combination of all three of these aspects really reduces time, tax, and risk, which really provides you peace of mind, which is, I think, what a lot of people are looking for from their accountants. So here are just a few expense categories that we're going to talk a little bit about. Often people who are newly incorporated tend to not include expenses that they may have incurred prior to incorporation. You can go up to 3 months prior to incorporation and record any of those costs that are related to getting your business up and running, startup costs. And often those types of things get left behind to the wayside because of poor record keeping and lack of knowledge. So really want to keep an eye on that if you are thinking of incorporating shortly. Reimbursed expenses. This can relate either to if the company with which you're contracting with is reimbursing you for costs. You want to make sure that you're capturing that so that we're not double dipping. Automobile expenses. So there are two ways of reporting your automobile expenses. There would be the percent calculation method, which would entail capturing all of your costs related to your vehicle and applying the business percentage of those costs as a deduction in the corporation. And how we would determine that percentage is based on kilometers. So if you drove 20,000 kilometers in total in a year, and you're letting us know that 15,000 are business related, we would determine the percentage there, 75%, and apply 75% of your total expenses as a deduction in the corporation. Excuse me one second. The second method would be the kilometer reimbursement method. That involves applying the prescribed CRA rate for kilometer reimbursement to the number of kilometers driven for business purposes. So using the second method, so the kilometer reimbursement method, is a little less time consuming because you don't have to capture all of your expenses. But we really suggest that you still capture all of your expenses so that we can use whichever method yields the higher expense, and then therefore the higher deduction in your corporation. So I do also want to note that a kilometer log is required by the CRA, so you have to track all of those trips. should the CRA request that information, you need to have that readily available. Home office expenses. So it's another thing that people maybe aren't aware of, but the portion of your home that you use for business, and often that's 20 to 30% for the majority of our clients, there's a deduction that can be made in the corporation to represent that. So your hydro, your gas, water, insurance, the interest portion of your mortgage, property tax, repairs in the home, all that, a portion of can be deducted in the corporation. Travel expenses. So the next three categories, travel, business promotions, and advertising, are really where we find the most opportunity for increasing your deductions and maximizing your expenses. These three categories heavily relate to networking. Your interactions with individuals that you consider as part of your network are all eligible as deductions in your corporation. So what does that mean? So anytime you're nourishing relationships, maintaining or building new relationships with somebody who you think, who you believe there's a reasonable expectation that could help you with a referral or help you grow your business in any way in the future, can be considered as part of your network. And therefore, interactions with that individual can be deductible. So in terms of business promotions, any meals, entertainment, drinks, that kind of thing, with those individuals can be deducted. And let me just also say that regardless of whether that person has any, participates in your personal life in any way, they can have participate in your personal life as well as your business life. So family and friends, of course, are eligible to be part of that network. With regards to advertising, if you're interacting in any sort of advertising or event, maybe it's a Christmas party, costs associated with you attending those types of events can be considered as networking and therefore are an advertising deduction. With regards to travel, if you are going on any business retreats, whether that's for weekend events away or a week conference, anything like that, if you're participating in occasions like that with individuals that are considered to be a part of your network, then those deductions, again, are eligible. So it's a very gray area, but as I mentioned earlier, it's really the best way to go about it is to include it so that at the very least we can have a discussion as to its eligibility afterwards. Because trying to gather up that information after the fact is always more difficult and less time efficient for you, less effective for us. So keeping those records up front and having a good set of books pays dividends in the future. So revenue. Several types of revenue that are most common with our clients. Of course, the general contract income that you'll have with your consulting. And what often gets overlooked by our clients is accounts receivable. Accounts receivable refers to any services that you've provided during the fiscal year for which you haven't collected the funds yet. And what's important to note here is when you performed the service. If you perform the service during the fiscal year, the revenue related to that service should be recognized in that fiscal year. It doesn't matter if you haven't invoiced it yet, it doesn't matter if you haven't invoiced it yet. Of course, if you haven't collected yet, it's inherent that it would be accounts receivable. But if you haven't invoiced it yet, that's not the determining factor. Investment income. Many of our clients maintain investment portfolios in their corporation, so registered to the corporation's name. And there are various types of income to be reported related to that portfolio, whether that be capital gains, dividend income, other income, dividend reinvested to the portfolio. There's a handful of various investment type income that needs to be accounted for and calculated at the year end. And lastly here, we have reimbursed expenses, which might be counterintuitive to be on this list, but in fact, if you are being reimbursed by your client, that would be reported as another type of revenue. It would offset the expenditure related to that reimbursement, of course, but it would be grouped within your revenue on your financial statements. So there's a couple things here that we want to make sure you're aware of. How to access the free resources in our client zone. There's a handful of tools here that you can have a look at, and it would just be on our website. You can follow the links to the free resources. Also, we wanted to make sure that you're aware that if you do decide to make use of QuickBooks Online, whether you want to get that through us or not, I believe, new users only. We do have a discount code that we are making available to our clients. So make sure you get in touch with us before you sign up. And sorry, one of the last slides here that I want to make sure I make everyone aware of is our service plans that are available. And I touched on briefly the first grouping here, the basic plan. So this, as I said, I'll just kind of reiterate, this service package is determined by our time and material. So however much time we put into interacting with you and preparing your returns, we bill that at the individual's rate at the end of the year. The standard type things that are included here, of course, your financial statements, your GST returns, corporate tax returns, audit representation can be included there as well if you're on the prepayment package, the monthly prepayment. And of course, our tax planning strategies. The next tier up is part of what we call our fixed fee pricing plans. So in these models, the exclusive and the pro, we don't bill you for our time and material. You're on a fixed fee within the designated limits of each plan. So for instance, the exclusive plan, you get all of the same types of reporting and compliance filings, as well as 15 hours of bookkeeping support, 20 hours of accounting support, quarterly reports from us. So you'd sit down with your account manager, phone call, and have a discussion of how the quarter is going. A QuickBooks Online subscription would be included in this plan, as well as our audit representation. The Pro plan, which is a step up from there, includes a few more things. You get 30 hours of bookkeeping, 30 hours of accounting, the preparation of your T4s and T5s are included, your personal tax return is included, the same quarterly reports, customized setup and training for using your QuickBooks and any accounting training you might need. Of course, the QuickBooks Online subscription, as well as a HubDoc subscription. Now, for those of you who don't know, HubDoc is a tool that digitally stores your receipts. So you can, you're out at a dinner, check rolls around, you snap a quick pic with your cell phone, it gets pushed into the image bank of HubDoc, and it's stored there. And it takes it a step further, in fact. The tool uses optical character recognition to extract the details of that receipt, pushes that information directly into your QuickBooks Online, and matches that up with the eventual credit card or bank transaction. So it's really the most robust bookkeeping strategy and suite of tools to ensure that you have the best audit protection possible, because you'll have all of the information captured directly from your financial institution, as well as the digital copy of that receipt attached directly with the transaction. So those are our service packages available right now. Our new website, CPA for IT. If you have any questions, of course, you can always reach out to customer service. Now I'll open up the floor for some questions. So let me just shift things around here for a sec. If anyone has any questions, so it seems like Rachel's been helping me out in the background here, answering some of the questions, and Lam had a few. And W has raised a hand here. So just bear with me one sec here, guys. I'm trying to get to it. So someone logged in as W. You can, if you have a question, and are you able to use your mic to ask that? I think you should be unmuted now. No? Marin has raised a hand.
I'd like to know how you can get access QBO to start that process?
Get access to QBO?
Yeah, I've been a cred user for a number of years, and I'd
Mhm.
like to try QBO now.
Yeah, so we have our bookkeeper can help you out with that, and her name is Jennifer. She's actually online right now with us. If you'd like to get that started, I can have her reach out to you and get you set up.
Yes, please.
Okay, so I'll have Jennifer reach out. Marion.
Thank you.
No problem. I see here that, sorry, somebody registered as W. Seems to have a question, but so MLM, to answer your question, I think your question was with regards to advertising or some of those gray area expenses. Yeah, business clothing can be included as an advertising cost. Now, including business clothing does come with some risk. CRA has often taken a hard line with that deduction. What you would need to maintain is that any business clothing that you're deducting is only used for business purposes. And if you can say that that's true, then you can deduct business clothing. Now, even if you maintain that as true, CRA is still very stringent on that, so they're still with some risk, but we allow our clients to deduct it and make deductions at their risk tolerance, so that is an option for you. Ben asked a question, is it possible to include personal fitness training as a corporate expense? Unfortunately, Ben, you have pinpointed one of the very few things that are specifically denied by the CRA. Along with golf memberships and golf green fees, gym memberships are not deductible. Specifically mentioned in the Income Tax Act. Now, with regards to golfing, though, if I mean, I've golfed a few times in my life, not very good, but the green fees are not deductible, but any costs with regards to meals after your round or meals during your round, maybe you stop off for a few drinks afterwards, can all be part of your networking expenditures and be included as business promotions. So the green fees, no, but the meal afterwards, yes. So reimbursed, so there's another question about calculating HST and reimbursed expenses. Now this is a little bit of a tricky thing sometimes. Often the intent is to simply offset your costs with, so, if you have some travel costs, your client reimburses you for those costs, you just kind of want a dollar in, dollar out. And that is the intent. So typically, the HST would be calculated in the same way that your initial expenditure was calculated with regards to the reimbursement. And that's often what people do. That's not technically entirely accurate. There should be HST calculated on top of that reimbursement, which kind of doesn't yield the desired effect. So we can get more into specifics with regard to that, but for now, the intent is to reimburse dollar for dollar, and you can record your bookkeeping in that way. So there's a few more questions here. Here we go. So there's a question about keeping physical receipts. or just take a picture? Will wants to know. So Will, either are acceptable by the CRA. A lot of people these days are are using digital copies of those receipts. So taking pictures and maintaining that on maybe an external hard drive somewhere or wherever you'd like. Both are acceptable. So one isn't necessarily better than the other. However, I know from experience that receipts tend to fade, and sometimes it becomes really difficult to see the details on that receipt. So if you're willing to keep a digital copy, I think that's really the better option. You just have to make sure a few things are captured in that image. So the date, how much money you spent, of course, and where you spent the money and what you spent the money on. So the general details of the receipts. Now, not the debit or Visa transaction receipt, the actual receipt that details those things that I just listed. And if your digital image has that information, then to me it's a little bit better than the physical receipt, but both are acceptable to the CRA. There was also a question about our home and auto worksheets. We share our worksheets with our clients. If you don't have one, don't have either of them, let us know and we'll provide that to you. But yeah, we prefer that our clients use our templates. So Ben wants to know, how can I manage the receipts better? So the best way to manage your receipts, I mean, of course, there's also the time-tested shoebox of receipts somewhere in the back of your closet, which can become quite the nightmare when you have to dig something out, if you ever have to dig something out. But really, there's a lot of really fantastic bookkeeping and receipt management tools out there. The two that we tend to recommend are HubDoc, which is we mentioned earlier as part of our Pro exclusive fixed fee package. And there's also another tool that's really fantastic called Receipt Bank. There's another app out there called Expensify. So there's a handful of them out there that really help you maintain digital copies of those receipts. Those services have monthly subscriptions, so keep that in mind. So someone, okay, sorry, just scrolling through. There's quite a few questions coming up here, so let me just kind of see if question about the basic package W. Oh, I think that related to the home and auto worksheet. Okay, so there's a question about what you would specifically need the financial statements for. So the CRA requires you to prepare financial statements, so to meet your compliance obligations. They are used to complete your corporate tax return. So that information is necessary to meet the CRA regulations, first and foremost. Secondly, if you ever require loans, often financial institutions will request that information from you. But really, all of these reporting, aside from the CRA and loans, our clients are owner-operated companies, private corporations, so it's for internal purposes, mainly financial analysis, and making sure that you understand your business. So the question has come up, is it worth adding the receipts into QBO or keeping them separate? Kind of a catch-22 there, really. Depends on your level of comfort with risk, I suppose, and how well you're managing your receipts outside of QBO. Attaching the receipts directly to the transactions within QBO is really the highest level of, I guess, for lack of a better term, audit protection. All of your reporting requirements and any CRA requests for information will be in one place, easy to access, easy to pull up and provide to them. So is it worth adding? It depends on your whether you feel the cost of the subscription provides you the peace of mind that you're looking for. Really is what it comes down to. So it's kind of a case-by-case basis, and you guys really have to make that evaluation for yourselves. If you're fantastic and really well organized, then you know, maybe it's not an issue for you, or it's maybe a cost savings you're looking to enjoy. So asking about holding investments within your company. So I assume you're referring to just general securities, general investment portfolio. This is very common for a lot of our clients who have the cash flow and the ability to invest. It's a tax-effective way to utilize any equity you have built up within your corporation without having to withdraw those funds and pay the personal marginal rate to then therefore invest them. So investing them within the corporation avoids that tax liability until down the road when you actually want to access the funds personally. So there's no issue with investing in an investment portfolio within your corporation. Is there something more specific you wanted to know about investing, or? Sorry, I'm addressing that to M. Lam. Maybe I can try and unmute you there, allow to talk. Maybe there's something you want to, maybe a point that you want to get across. Might be a more efficient to do with your mic if you have one available. Oh, there we go. If you have a mic, M-Line, I think we should be able to hear you now. Wife had the options to buy her options out of her company. Had your corporation. So your wife, you purchased your wife's options from her employer within your corporation. It's a little bit of a complicated transaction. I don't know if your wife would have any requirements or obligations to report anything to the CRA. As far as your corporation is concerned, however, that sounds like just a good investment. I mean, if you're able to purchase those options at a reduced rate with corporate funds and hold those securities, I don't inherently see any issue with that transaction. Yeah, I don't see anything really wrong with that transaction. I might have to really dig into that specific scenario a little bit more because I'm not sure I have the full picture about your wife's requirements for transferring that option to another entity. It doesn't seem inherently problematic. So W has a question about the basic package. So for a basic package, $2,400 minimum. So I just want to be clear regarding the basic package. Basic package is based on time and material. So as I said, each individual at our firm has a chargeable rate. And whenever that individual spends time working on your file, they record that time and you are eventually billed for however much time they spent at that rate. And that goes for the accumulation of all the staff here recording time into your account. The $200 a month is what we suggest because based on historical interactions with our clients, we tend to end up around $2,400 for the basic package. So that's just an average cost. It's not necessarily, doesn't necessarily represent what your bill will be at the end of the year. The $200 a month is the prepayment that we suggest when you're on that service package. So your $200 a month will accumulate in your account as a credit, and that credit will be applied to the eventual invoice amount at the end of the year. If there's any discrepancy between what the actual invoice is and your prepayments, we can push that into the following year. So if your fee ends up being more than $2,400, you'd be required to pay the difference. If your fee ends up being less than $2,400, we can apply that credit to the following period, and you can make use of it in the next fiscal year. But really the takeaway here is that's an average cost, not necessarily what the year-end invoice will be. Yeah, we can provide a breakdown, a detailed breakdown of all the time spent in that has been billed to you for a particular year end. We track all of that, and as I mentioned, we're ISO registered, so we have a detailed process and are adhering to it for all of our clients. So you can request the WIP or work in progress that's on account for you at your year end so that you can see where our time is being spent. I really think transparency for you and for us is in everyone's interest. So letting you know what's causing our cost overages is really important. And every year we're trying to do a better job of ensuring that we're communicating that on a timely basis, because kind of making sure our clients are aware of why things are the way they are is really important. So how do we choose some staff with higher rate versus lower rate, or is that just auto-assigned when we sign up? So our internal processes are, okay, so we determine which staff member does particular tasks based on our internal processes. So um, particular staff we've designated as junior staff are do the majority of the time-consuming work. They have far lower rates than the intermediate and senior staff. So each staff member has tasks assigned to them. So you don't really get to choose. That's sort of our internal process. But we've done our best to be most cost-effective process as possible for our clients, of course. You're very welcome. Okay. Any other questions, guys? Oh, the receipt tracking apps I mentioned. So there's three. HubDoc. And you know what, W, I will actually type this answer. You can't take the words right out of my mouth. I'll type the answer to you right now. Yeah, so W is asking about the receipt tracking apps. They include HubDoc, Receipt Bank, and Expensify. So those are all really great tools. People tend to love them. Okay, so do you recommend QBO over Zero? Both of them have great functionality and very similar functionality, to tell you the truth. We tend to recommend QBO more often than Zero. QBO is backed by Intuit, which is a very large software manufacturer. So things are developing and changing all the time, and they're implementing new features and new reporting functionalities often. It's the major focus now for Intuit with regards to bookkeeping. So Xero is a fantastic tool, and it was one of the first into the market, and really that made a splash in cloud bookkeeping services. But they are kind of a smaller software developer. They're based out of, I believe it's New Zealand. It's certainly the more popular tool in Australia. And I suspect that has to do with sort of supporting local developers. But so it has a huge market base out there, less so in North America, but it's a fantastic tool as well. we tend to prefer QBO, but we certainly support usage of both tools for any of our clients. So if you have a preference, we're happy to work with you when using Xero as well. Hey guys, coming to an end here, I guess. Questions are few and far between at this point. W, if you have any more questions, feel free to reach out to me. I'll stay on the line for another 5 minutes or so if you guys have any questions at all. But otherwise, this concludes our webinar this evening. So thanks for joining us, and look forward to working with all of you in the future. As I said, I'll stick on the line, but have a great night. Thanks, everyone.